Hi, I'm Greg Hunter. Thank you for joining us today on USAWatchdog.com. We have back a favorite of mine and of our audience here on USA Watchdog, Greg Mannarino. Of course, he's a former floor trader. He came out with a book called The Politics of Money recently. He's written 6 or 7 books. This book is number 62 on Lulu.com. It comes out in wider release in a few days. Greg Mannarino, thank you for joining us here on USAWatchdog.com.
Greg, it's always a pleasure. Thanks for having me again. I really appreciate it.
Well, one thing I left off, you have GregMannarino.com. You have your YouTube channel, almost 1 million views. Haven't been on it that long. Let's jump right into the fire here and start off with these numbers they came out recently. It just seems like all the numbers are bogus. The unemployment numbers and now the GDP numbers. 1.15% is the nominal GDP number. People like John Williams at shadowstats.com say, well, if you take a look at the seasonal factors and, adjusted for inflation, probably that's what drove most of the 1.15% growth. What do you say?
I don't think we're growing at all. I think we're contracting. I think this is all a farce. I always refer back to the money velocity. We're beyond historic lows at this particular point. We've never seen numbers this low before, ever in history, and they're getting worse. That's a frightening prospect because without money, cash, changing hands, you can't have any growth. And something I've been over many, many times in my particular videos in my blog is when we do see the money velocity move, it doesn't mean things are getting better, Greg. I believe that when we start to see that means people are rushing faster out of the dollar than they already are. We know for a fact that the dollar now, well, in my view, is in a terminal phase. As a matter of fact, I made a chart for you and for your listeners. Let's have a look at this.
I love your charts, buddy.
This chart is very frightening to me. This is from 2002 until today, right up to date. Here's the U.S. dollar. What do you think of this, Greg?
A little bottom bouncing the last couple of years, but it doesn't look good.
It looks awful. I just hate this chart. And today, as a matter of fact, we're seeing a rally. Well, the past couple of days, a little rally here in the markets for a lot of reasons. But one is because the dollar is losing value against the euro. So everything becomes more expensive, even shares of stock. It's just an awful situation that we're in here, Greg. And, they're going to prop it up, they're going to twist it, and they're going to spin it every way possible. But that's where we have you to let us all see the truth.
Well, you too. Ben Bernanke was out defending his, $40 billion a month buying mortgage-backed securities, which I keep saying that, these are the mistakes of bankers that was supposed to be equal to a treasury. Surprise, they're not. And then the Operation Twist, $45 billion. And after that, we're going to continue to basically print money. And something that you came out and said to me on the phone as I was setting up this interview is, bet against debt. Tell me about your bet against debt theory.
All right. Well, what do we know? Well, the dollar chart that I just showed you, the dollar represents debt. It does not represent wealth at all. We understand that the debt bubble is being fueled, just like you said, is out of control. We have over 1,000 million a day at this time being printed out of thin air. That's for this mortgage-backed security scheme that the Federal Reserve is doing right now. But think about this. At the end of this year, we understand that this extension of Operation Twist is ending. What else do we know? We know that Ben has come out and said, hey, we are going to keep interest rates low through 2015. How does he do that, Greg? Well, let's think about it. He has to get into the market. He can't just say it. Ben is not magical. So how does he do that? He has to buy bonds. He's literally telling us that at the end of this year, he's going to do QE4, which is going to be, in my opinion, an in-our-face bond buying purchasing program, I think biggest we've ever seen yet. And that's the big print. So what's happening?
The big print? Hold on. Let me breathe. Let that breathe. That's the big print? The big money printing. You got it. I love that.
Yeah. We understand what's going on here. The central banks of the world have become printing presses. And because of that, they're creating more issues regarding debt. It's unbelievable. Now, this is another chart I made for you guys out there and you. This is a 30-year bond here. This is ugly. Clear bubble. This isn't a bubble. Now, this bubble, along with every other bubble, will burst. Let me give you another example of a bubble here. This is the Dow. This is another bubble just prior to the crash of 2008. You can see the pattern there. Very, very similar pattern here. It's incredible. Now, if we understand there is being an epic bubble being created with regard to debt, this is the sovereign debt in the United States. Look at that bubble.
Oh, that's in your book?
That's my book, yeah.
That's parabolic.
It's terrifying. So what we want to do is bet against that debt. And how do we do that? Well, we realize that debt, currency is debt. We don't want to hold currency. We want to get away from this. And how do we protect ourselves? How do we bet against that? How do we take the short end against this debt and have the ultimate, literally, hedge? That is simply this. Get yourself into gold. Get yourself into silver, physical, in your hand assets. What we're really doing, Greg, and people don't understand this, but it's an interesting concept, is by holding precious metals, we're really taking the short end of the trade against debt. Now, my trading philosophy for very many years has been to bet opposite of the crowd. I don't follow the crowds when I'm looking to invest here. I always look for a way to get on the opposite end because fear creates more wealth than greed does. And this is a proven fact throughout time. So what we're doing is betting against that debt by holding real assets, gold and silver in this particular case I'm discussing. And because of that, we're going to be setting ourselves up for a major win as we move forward because currency is dying. The debt-based economic model that is the system that the modern world is following, it's over. It's dead. A new monetary system is coming, and we need to protect ourselves.
One of the things, about your, bet against debt is also bet against bonds, which are really currency instruments, bonds. And I got some smart people on the site. One of the guys that comments is a guy, he goes by that handle, Man About Dallas. And really smart people. I don't know why they come on the site to get information from me. Some of these people are brilliant. And I've been screaming about how people like, Ray Dalio is the biggest bond fund, $120 billion. And, John Paulson, who bet against, the housing bubble, made billions of dollars. And then Bill Gross. He is nicknamed the Bond King. He's nicknamed the Bond King. This guy made billions of dollars in the bond market. PIMCO, that's what he founded and sits atop of, has $1.3 trillion under management. He's on Bloomberg. He's writing posts on PIMCO's website. He is on other channels saying that you should buy gold and you need a commodity that, I think he's wrong about the commodity part, but he's saying you need something that you can't be easily duplicated, like dollars. And this guy, Man About Dallas, comes in, and I've been screaming about how important this is. This guy is saying, buy gold, buy silver, buy tangibles. And the Man About Dallas guy says, that's such a unbelievable signpost, mile marker. It's kind of like the Pope saying, well, this Christianity thing we've been doing for the last couple of thousand years, we should really look into doing some Buddha stuff now, too. It's an unbelievable turn of events for a guy nicknamed the Bond King telling people on the company website, on television business channels to buy precious metals, buy, hard assets. And he's talking about buying gold.
Yes. Bill Gross is a smart guy, and he understands the bonds are in a bubble.
Yes.
And you got to bet against it. What people don't realize, I think, by and large, Greg, is every single, and there's never been an exception to this rule, ever, every single bubble, economic and financial bubble has to burst, and they all will burst. They have all burst throughout history because they rise above a level that can be sustained by any means. Something I go over at length in my book here, The Politics of Money. It cannot be sustained indefinitely. So it brings us full circle. Bet against the debt, just like you just said. That's what Bill Gross is telling us. The man is very smart. He knows what he's talking about. Bet against the bonds, which is debt. Bet against currency, which is debt, and you will come out of this good. If you're one of those out there who believes that pieces of paper with numbers printed on them represent anything real, you got problems. And that's why I'm on this mission to make people realize that this whole entire thing is a farce. It is coming apart, and many people are going to suffer because of that. But some, if they take the advice of someone like Bill Gross, they're going to do very, very well. We've never witnessed anything like this before, Greg, in the history of the world. Never once.
This is big. Yeah. Does it make any difference who's, last night with the debates, Obama, Romney, does it make any difference who the president is in 2013? Does it make a difference?
No, it doesn't make a difference. I always say Wall Street runs the world. And our votes, unfortunately, don't matter. In my opinion, they've already picked the next president. It doesn't matter. He's just a spokesperson for Wall Street. The policymakers, in collusion with the central banks, the investment banks, they run the world. And actually, it's more simple than that. It's the investment banks and the Federal Reserve. They run the world. The policymakers, they take a back seat. And they're being puppetized.
Final question. Are gold and silver in a bubble?
In no way, shape, or form are they in a bubble. Well, first of all, they're not widely held assets. For something to be in a bubble, it has to be widely held. Very few people actually hold this asset. 10%, something like that. I've heard varying numbers.
That'd be a lot, 10%. 1 out of 10, I'd say less than that.
Probably less than that, right? But it's a fraction of the people as a whole. What I do believe is going to happen is we're going to see a mania in metals. And it's going to look like a bubble, but it's not going to actually be a bubble. But there will become a time when we need to reallocate funds out of our metals. But that's not for a long, long way off. I mean, I put price targets on this stuff in my book. When we're going to need to reallocate our funds into distressed assets. And again, that's when this bubble bursts. And we're pretty close to it. We're pretty close at this time. I really believe that if we follow this trajectory we're on, we could literally be months away.
Greg Mannarino, GregMannarino.com. Thank you for joining us on USAWatchdog.com.
Thanks, Greg.